Hi, DataTrek co-founder Jessica Rabe here, and for today's video, I'm going to share some key findings from our recent DataTrek 2024 Investment Outlook Survey. Our goal was to get a sense of current market expectations as we start a new year. Before we get into the results, here are three brief background points. The first is that we got well over 500 responses when we ran the survey 2 weeks ago, the vast majority of which came from our own readership base, who are predominantly investment professionals. The second is that we asked 11 questions and all required just one answer. We also randomized possible responses where it made sense. Lastly, at a 90% confidence interval, the standard error between responses is 3 percentage points. So, any spread in the response percentages for two possible answers larger than 3 points is statistically significant. With that, let's get into the results, going in the same order as our survey. The first question we asked was, do you expect the U.S. economy to experience a recession in 2024? The upshot here is that the vast majority of respondents, 94%, don't expect a sharp U.S. economic contraction this year, and they are more certain about this fact than any other question we asked in our survey. Additionally, 59% of respondents don't think U.S. GDP will fall for 2 straight quarters this year. In other words, our survey population has a lot of conviction that the Fed will achieve a soft landing, which we do agree with. All this supports markets' current high valuations, as confidence in the economy also means confidence in corporate profits. Next, we asked where survey respondents expect Fed funds to end this year. Most survey takers don't think the FOMC will cut rates by more than 100 basis points in 2024, which we think is the most important finding from our survey. Why is this so critical? Because Fed funds futures give very high odds of the Fed lowering rates by 1 percentage point this year, something our survey says investors don't actually believe. In other words, investors are taking stocks to new highs this month because they think fundamentals merit better valuations, not because they're convinced that the Fed's about to start cutting rates aggressively. Moving on to where survey takers think 10-year Treasury yields will in 2024, nearly 3/4 think they will be lower than 4.1%, or where they were when we launched our survey. That said, they mostly only expect a modest decline of at most 0.5 percentage point by the end of this year. Given that real or ex-inflation interest rates continue to hover around 1.8% and expected inflation remains at 2.2%, only a modest decline in 10-year yields makes sense as long as there's no geopolitical shock. Now, let's review what our survey takers see as their best investment ideas for 2024. As far as asset classes go, they believe U.S. large caps and small caps will perform the best this year out of the 9 potential options we listed. Just over half favor U.S. large caps, and a little over a fifth favor U.S. small caps. Gold came in third at 7%, over both emerging markets and EFA stocks, which only got 5 and 3% of respondents' votes for best idea. Now, we are bullish on U.S. large caps as well, but the survey results certainly suggest this is a consensus trade right now. That leaves open the possibility that non-U.S. stocks might outperform for a quarter or two, but the year certainly has not started out that way. Focusing now just on U.S. large caps, the tech sector was by far and away the most favored S&P sector to outperform in 2024. Healthcare came in second at just 15%. Again, while we agree tech will likely outperform this year, the sector will have little room for error when it comes to meeting high expectations relative to corporate earnings and capitalizing on Gen AI. Narrowing our focus now to just big tech, our survey respondents are most bullish on NVIDIA and Microsoft for the year ahead. This likely stems from all the enthusiasm around Gen AI, given that this relatively new technology can likely have the most immediate profit impact on both these companies. Alphabet and Amazon came in third and fourth place, also understandable given their market leadership in cloud computing, which should also benefit from mass AI adoption. Meta, Tesla, and Apple received the fewest votes, which tells us they need to dramatically sharpen their Gen AI stories for investors. Moving back out to the broad US equity market, we asked survey respondents how they think the S&P 500 will perform on a total return basis in 2024. They're overall bullish, with 79% of survey takers expecting the S&P to rally at least 5% this year. What's more, just 8% of respondents think the S&P will fall by 5% or more this year. As for how strong they think the rally might be, survey participants are actually pretty split. Over a third, or 38%, think the S&P will advance by 5 to 10% on a total return basis, while just under a third, or 31%, think the index will gain 10 to 15% this year. For what it's worth, we do think the S&P can rally by double digits in 2024. Switching topics now to big events that could impact capital markets this year, we asked which candidate survey takers think will win the 2024 U.S. presidential election. Our survey responses roughly mirror the current Real Clear Politics betting odds averages, and the upshot here is that in both cases, there's no consensus. We're still a long way off from Election Day, and anything can happen between now and then. At the same time, 3/4 of survey respondents don't think either party will control all three branches of the U.S. government. In other words, they expect political gridlock to continue, and that's typically a positive for capital markets since neither party can fully implement their political agendas. But again, we're still a long way from Election Day later this year. Switching gears again, we asked survey takers about their largest stock market related concern for this year. Over a third listed geopolitical uncertainty, another 14% said U.S. political uncertainty, and both high valuations and monetary policy got 12% each. Fortunately, geopolitical shocks that hurt U.S. equities for long periods of time are rare. Lastly, and perhaps the question in our survey that has captured the most attention, we asked if survey respondents plan on investing in a Bitcoin ETF. Almost half of respondents, or 44%, have no interest in Bitcoin, either directly or through an ETF. Just 17% of respondents said they do plan to invest in Bitcoin ETFs, putting their lackluster returns since their launches in perspective. Over a quarter of respondents, or 28%, said they were considering investing in a Bitcoin ETF. Their hesitancy may have stemmed from memories of what happened after Bitcoin futures launched in December 2017. Bitcoin hit 18,000 back then, but it took nearly 3 years, or until November 2020, until it got back to that level. So to wrap up, respondents to our DataTrek 2024 Outlook Investment Survey are bullish on stocks and bonds, especially U.S. equities, and more specifically, technology. Whether or not survey takers were bullish or bearish came down to their views about the chance of recession this year and the outlook for short and long-term interest rates. The bears are more likely to think an economic contraction is on the way and the Fed will not cut rates aggressively in response. Nevertheless, we are bullish along with most of our respondents since we don't think there will be a recession this year and do expect lower rates. Thanks so much for taking the time to watch this video. Please share it with anyone else you think may find it useful. And as always, please like and subscribe to our YouTube channel if you enjoyed it. You can visit our website at datatrekresearch.com for a 2-week free trial to our daily reports on markets, data, and disruption. There's no credit card or personal information required. You just have to drop in an email. Thanks again for watching, and we hope you have a great day.